This is Tom Aspray from the Viper Report Market Wrap video for the week ending June 6th. Well, more chaos in the markets last week. This time it was the two bros, Trump and Musk, but even that didn't seem to interrupt the bull trend in stocks. You can see this chart of the New York Composite. It had a nice gain of 1.3%. More importantly, last week we talked about this last 3-week range. So, you know, if you're a trader or an investor, you see this sort of formation, you know that, well, okay, if you're going to think you're going to break out to the upside, which is I did based on the AD numbers, then it really allows you to control your risk to a stop under those lows. Nice close here. So it looks like we're going to challenge, you know, the downtrend here from these two peaks. You can see below we have the stocks only AD line turn back up. I mean, this point until it makes a new high, you could always say it could reverse to the downside, but we'll look at the market leading NASDAQ 100 AD line, and it's already moved above that level. That's a good sign. So, you know, once again, new high in the all AD line, not a new high yet in the stocks only, but still very positive. For the SPY, also broke out of this range, so not that far below the all-time high. Of course, that's been projected by the AD line a number of weeks ago. It still looks strong. Volume picked up a little bit, and you know, so it does look like that's the path of least resistance. You know, a drop back below, you know, 476 or so would be a negative sign. Last week the AAI survey was about flat, so you know, a differential at, you know, -8, so you know that still appears to be in an uptrend. You know, of course, if we move above this zero line, then you know there's lots of room to move up, you know, into where we were at -40 into the +20 range. Looking at the weekly chart of the Qs, also broke out of that range. It's very close to that high. You know, the AD line has been much stronger. You know, it's a clear uptrend. That all looks strong. Down below, the relative performance, those you aren't familiar with it, that measures the relative performance of the Qs to the S&P or SPY, and we've been saying for quite a while back in here that it was leading it, so you're going to get a bigger bang for your buck with the Qs. However, that's been working for a while. You can see we have the yearly R1 resistance here at 572. That'd be sort of a blow off top here. No one's really talking about it, so in my mind that makes it a little higher probability, but next week may hold the key there. On the daily charts, last week, you know, we get a marginal new rally high here on Wednesday and Thursday, but then closed lower. Friday we formed a doji, so that's a bit, you know, of indecision here. You know, the AD lines have not, you know, made a new high with prices, so on a short-term basis, though they've turned up nicely. You know, Friday would have been the day that you would have thought had a better chance, particularly the jobs report, to drop below that level. You know, jobs report was benign, and you can see the stocks only, you know, came up a little more than the S&P, so that's a good sign. This represents the more common stocks. So, you know, we need to get above these highs to confirm that, but the moving averages are both rising, stocks only and all, so that does favor the upside more than the downside. Looking at the daily for the Qs, also formed a doji, trying to bump into that R1 here, which is at 538.13. You can see the old high back here, 540.01. Strength of the AD line here suggests we will hit it. You know, it is a bit extended, but still, you know, clearly leading prices. So that means that, you know, a greater number of NASDAQ stocks are rising than falling, and they're doing better. Those stocks in the QQQ are doing better than those in the SPY, which is supported by the RS analysis down here that also looks quite strong. So, that's still positive going in there. We got a little bit of a shakeout on the bros fighting about anything and everything, but you can see that was barely a hiccup on the daily chart. We could get more of that, but hopefully cooler heads will prevail. We did see some improvement in the high-low analysis. A new high marginally, 173.38 new lows. So new lows falling, new highs are rising. That's a good sign. Similar pattern we're seeing in the NYSE composite, 12 and 83. So, well below the level seen at the end of last year. But, that's, if we break out of this downtrend here in the NYSE, that number will start expanding. Let's look at some of the other indicators. You can see this is S&P versus the overall put call ratio, 0.87, so still buying more calls than puts. Index is turned up a little bit, but they're buying a few more index, 1.18, so a slight favoring to the put side there, but you can see what a nice peak we had here, that was right at the low in April. So it'll be interesting if we do get any more selling early in the week. We'll be watching those. No real signs of trouble yet from the VIX or the VXN, still in a downtrend, and the VXN, also reinforces what we've been saying about the Qs acting better. You can see the VXN has made significantly lower lows, than the VIX. So, first move to think this was in a new uptrend would be a strong move above that moving average, then above this peak. That will take a number of days. Though not a lot of gains on Friday, nice advanced decline numbers. So 87% of the S&P was higher, 69% of the S&P 1500 was higher, and 76% of the QQQs were higher. So good solid buying on Friday underneath the market. It was another good week for growth over value. You can see it's turning up very sharply. I like the more orderly sort of rises, but we'll be watching that level up in here. Some little more encouraging signs from some of the value ETFs. We'll get back into when the sector report. We'll see we got a couple of positive DTS signals for some of the value indices. So, maybe there's some bargain hunting in those. On the interest rate fronts, on the left panel here, we have, this is the yield of the 30-year bond. You can see it appears to have topped out here, because it's just dropped below this last low here. You can see the MACDs, are dropping pretty sharply. So that does suggest, even lower yields. This is a long-term bond, so we get back into the, 4.7% yield. And if we break this low here, that's at about 4.61. That would really confirm it. As, of course, the bond yield goes lower, the price gets better. So that's helpful for the bond market. You can see in Treasury 10-year notes also showing a very similar pattern, clearly in a downtrend. The Stark band down here is 4.256. So, we get down there, we could get a bounce. We move back below the new pivot for the 10-year yield, which I guess is at 4.390%. So this is one of Jerry A's creations in TOS that generates our sector report. So you can sort it, in terms of weekly signals: ARKG, FBT, Biotech, FXI, China, IBB, another biotech, oil, XBI, another biotech. Also, you can look at, what the new, 3-day signals. So these are based on the same principles, but looking at the price action over a 3-day period. Something, frankly, I hadn't done before, but Jerry came up with it, and it's really quite interesting. I'm enjoying it. So REMX, then if, you look at the daily, Apple, KRE, okay, so that's a value. EWZ, that's Brazil. Let's see what else. IWD, so that's the Russell 100 value index. Okay, and it's given a daily. You can see it's weekly and 3-day are still negative. You look down in here, what else do we got here? Solar, TAN, RPV, that's another value. And XLV, the healthcare may be on life support, but maybe it's finally ready to move. So 63% of the ETFs are above their quarterly pivot. That's a positive number. Growth, 80% are above. You can see the breakdown here. XLV, that daily signal. XLY flashed a daily negative because of Tesla dropped 15% with the argument. And value, 45%. So you can see a bunch of daily that we mentioned before. XLF, it stayed positive, act a little bit better. Still we have XOP, XLE. They're both energy as a weekly now, but still below its quarterly pivot. So we move down here into the short. So short ETFs still be out of those. 000. Long ETFs pretty looking good. The quarterly pivot, the TNA, the small cap, is still below its quarterly pivot. That's about the only negative sign. And you can see the TQQQ and everything else are looking pretty good, with a nice week. So let's look at the sector report. Energy picked up 58.3. That's the best it's been. You can see relative performance here is still not looking great. So, be discussing our reports. We'll look at some of the daily analysis of some of the ETFs, and they still haven't gotten to the point where I'm ready to jump in them. And this is one of the reasons. You can see very well timed. This was March of 25. And staying out of the energy ETFs or stocks since that time has been a great idea. Where do you look at? COP, ExxonMobil, and SLB, but they're just getting daily. So if they're going to finally turn Oxy, it's about the only one that's positive, based on the 3-day. For students, we build your ability to analyze the markets and your ability to invest or trade from the ground up. So one of the first steps to say, well, look at Oxy, is to look at a weekly chart, and then we'll test you. So I would hope that one of my students, that they looked at this chart, first thing would say was like the 20-week EMA is still declining. That's sort of a tell, that says, okay, it's probably too early for a bottom there. You'd like to see, because this is 20 weeks out, you're going to need some positive price action for it to bottom out and turn higher. This is the relative performance. Like I said, it's been negative since that signal we saw on the sector report dropped here. OBV, students will send me their charts, and and I'll have you draw in various things like major resistance, here, downtrend, like there, and then we'll discuss them, and where if you messed up or didn't catch something, that's where we'll show it, and then we'll work on that the next time. So you can see OBV is about the only one that's looking like it could be bottoming. So I'd be looking at this resistance right here. We can probably get a little thinner line there. So turned up from its moving average. You can see volume was last week. So maybe this is part of the bottoming process. Typically what would happen, we rally back above the 20-week EMA, and then we'll probably get a pullback, and that could be a better opportunity. So back to the sector report. Industrials still screaming. So first, materials really improved a lot. Dow, chemical companies, FCX, of course, copper, and steel, given the latest action by the president for steel industries. So they got really a bid. Newmont Gold gave a daily DTS. The rest of them are positive. So, I think it's too early to, say that gold is topped up here. So we're in both Newmont and in GLD, but nice action here in the RS for the materials. Even better, industrials have been a favorite. You can see a really nice uptrend, bounced off its moving average. Caterpillar just gave a daily DTS. So BA and LMT, will be the next ones to maybe roll up. UPS still negative across the board. Consumer discretionary. There's a couple that last week's action, will bear watching. So consumer discretionary, Tesla's a major holding, so that caused it to crack. You can see that Tesla gave a 3-day, but the weekly is still positive. So back in that, Home Depot still positive, Amazon, CMG, etc. 83% are weekly buy, 50% now 3 days. So we'll be watching to see, if those 3 days change into weeklies. Consumer staples also still in a downtrend. Some bright spots. Target. The battle goes on between Walmart and Costco, and 58% weekly positive. We're in XLP, has done a lot for us, but it hasn't gone against us either. Healthcare, you can see really no signs of a bottom yet, but the 41%, that's the best number we've had for a while. Still just 18% weekly positive, 41% in a 3-day, so that's getting better, and 75% in the daily. So you can see UNH, it's gone 4-hour daily, so it's a candidate to watch for a 3 DTS signal, as is ABBV. Any of these in the 3 DTS, even Pfizer, even though it has a daily negative. Financials, the banks have held firm. They were looking a little weak. Even JP Morgan, it's negative. AXP, so back to 90% weekly, 90.9% daily. So it was looking a little toppy to me, but it come back. Technology, still a gangbuster. You can see the RS chart is sort of broken up because of the PDF, but still looks really strong. Apple has just gotten to a daily and a 4-hour. So it's about the only one that's still out there without. Texas Instruments we talked about last time. Communications services, telephone, Verizon, and Google is positive in there. ATI, Activision, negative quarterly. So, but still, 66.7. So it's got some positives here going forward. And then if you look at the utilities, 25%, so this is starting to look a little worrisome. That may be a sign, a reaction to the rate picture, but we'll probably stick with it. And real estate, is trying to bottom out in here. So 66.7, that's one of the better numbers we've seen, and a couple of 4 hours here. So AVB, Avalon, that's one of the larger ones. Will it flip a 3-day buy? We'll see early in the week. So next week we have an inflation data, NFIB optimism index. That'll be interesting. CPI Wednesday. Producer prices. Jobless claims ticked up a little bit last week, so that'll be getting a focus. And then we have the mid-month consumer sentiment from the University of Michigan. So CPI will be pretty much the inflation numbers have been pretty okay, So of course everyone's in doubt on whether the tariffs are starting to show impact there. I think it might be a little early, but I would think by July and August we should see more of an impact. So I hope you enjoyed the video. As always, send me your questions, comments, things you have questions, want to know how to do, etc. More articles on the Viper report, and of course, we'll hope you give us a try for the Viper ETF or the Hot Stocks report, $34.95. Thank you very much.